start off with the OPEC Plus deliberations over the weekend. I wouldn't call them as much deliberations because it was a very short online meeting. Just tell us more about how it went down.
Hi, Yusuf. Yes, so it was roughly a 20-minute meeting, and it went as most analysts and traders expected, with OPEC Plus agreeing to keep output steady. Now, that follows what they did in October, which was a big cut of 2 million barrels a day. There was some expectation, perhaps not in the last few days, but say 2 weeks ago, that there would be another cut. The fact that they didn't is broadly positive for the big importers around the world, like the US. And I think, well, the group has said that it can convene again at very short notice if it needs to react to any market developments. But for the time being, it's decided to hunker down, in the words of one analyst, because it's got to see the effects of the sanctions, the extra sanctions on Russia that are kicking in today, and also what happens with China's reopening.
I mean, those are the two key themes as we go into year-end over the next 3 weeks or so. Which of the two is likely to reign supreme, and what are you hearing already from other sources about the impact either of them could have?
Right now, it's clearly China that's driving the market, and that's the reason oil is up today. And oil markets are taking their cue from what's happening in equities, and they're seeing the easing of lockdowns in cities like Shanghai, and seeing that as a sign of an eventual full reopening of China, which should be very bullish for oil demand. In terms of Russia, the price cap was set, the G7 price cap was set at $60 a barrel. For Russia's most important grade, Urals, that's actually above what Russia's selling it at the moment. So the market pretty much expects that Russian flows will continue as normal. However, there's a big but, because Russia could still react by cutting supplies if some buyers of its crude decide to implement that cut. So we haven't seen the full effects of that price cap yet.
Yeah. Are you seeing any signs of potential discord between Russia and other members of the OPEC Plus group? Because now with the price cap in effect for certain areas and certain grades and certain countries, you could argue maybe that the relationship's going to be tested again.
It could be. I don't think we're going to see that, though, for until next year. At the moment, there's strong unity within OPEC Plus. It's very hard to see any sort of sign of tension between Saudi Arabia and Russia, the two de facto leaders. The other members of OPEC Plus, they don't like the idea of a price cap. They see it as a possible precedent for importers creating a bit of a buyer's cartel in future. So in some ways, they are standing behind Russia, but at the moment, no, we're not seeing signs of discord.